Again, good evening to everyone. Thank you for your time tonight. And today I'm going to address some questions for uh, our clients who trade through interactive brokers and affiliated its trading through Options 21. As normally, we have to do a disclosure. These materials are for educational purpose only. And of course, you know that futures and futures options involving risk. So these are not always suitable for all investors. And of course, you need to consider your personal circumstances and financial positions. We are not giving here personalized advice, it's only educational purpose. This is really important for you to understand that you're taking your responsibility to manage your portfolio according to your personal circumstances. Our license given by Australian financial authorities is only for educational and general advice, and it's not in relationship to your personalized advice. Previously, I already mentioned to you that Interactive Brokers has more than 50 types of orders, and it works on 90 plus markets. We are going through quite a few of them already. We've done probably 30 different orders, and tonight I'm going to address advanced trading. You can see this on the screen. We already mentioned limit risk. We already discussed speed of execution, price improvement. We mentioned about privacy as well, time to the market. And tonight I'm going to talk about advanced trading. So advanced trading has a few very useful features like conditional orders, spreads, volatilities, and one cancel all. Although we would like to cover as much as we can, but as I mentioned previously, due to complexity of these orders, we will take only a couple of these advanced trading orders. More specifically, I will talk tonight about conditional order and volatility order. Of course, we have mentioned previously spreads, and I will as well show you if you want. I already mentioned one cancel all, that's as well advanced order, advanced type of order, and basket order. It is pretty much institutional trading style. This is designed for arbitrage. This order designed to fulfill a basket of different equities to replicate certain indices or certain instrument. It could be ETF, for instance, right? So you can create high volume trading replication of some indices or ETF. I think at this point of time, there is no reason to discuss basket order. We don't have enough volume trading. We don't have enough clients who would be inclined to trade such orders, and conditional orders are more in line in our interest. So what conditional orders means? It's basically an attachment to the order which makes order conditional. So it's either submitted or will be cancelled if specified criteria, one or more, define the contract are met. And again, conditions are different. I'll go through different conditions and I'll show you that you can add one condition on top of other. However, when you do use conditional order, you need to have crystal view what you're going to go to achieve by using conditional orders, because sometimes complexity are not the best way to trade. Complexity sometimes create additional mistakes, and if your model is not verified, if it's not refined, and you have vague idea how it will be in reality, then I do recommend you not to use conditional orders because it could hurt your positions. On the other hand, conditional orders can be very beneficial, specifically when you trade, when you actually place your order outside of the market hours. For instance, you would like to trade US market, and of course, you're not going to wake up every night and watch your market in US. And of course, there are ways how you can manage it, as well as conditional order. Conditional order would be probably good preference if you have defined strategy, if you have certain pattern with levels with very defined level of entry and exit, basically your trading plan. If you are disciplined, if you are sticking to your plan, and you can define these levels of entry, exit, stop loss, and profit take, then conditional order can be very beneficial for you. And I'll demonstrate you how it could be beneficial. But before we can go, I just need to tell you how you can place your order, conditional order. So in your trader workstation, you have to do 5 steps in order to place your order. Initially, as normally, you can, let me just highlight it by a red pen. You can see number 1 is you are placing normal buy or sell order. In this case, it is buy. And here is the description. You would like to buy, in this case, not just simply a stock, but what is more important, you can buy an options, but only if certain conditions are met. In this case, you would like to buy a call with a strike 490 if underlying stock falls to the price 464. So you are expecting some movement down, and you would like to acquire one contract because you expect that the price and the movement down of the stock will give you an opportunity. And therefore, the action of your plan is to buy one contract at limit price, and you select the limit price as $30.95. We will talk tonight as well what are the tools available for you to calculate expected value of your contract. And I already mentioned that OptionVue is the best one on US market. And that's not only because we represent OptionVue in Asia, but as well because it has proven by many, many years that it does work very accurately, and it provides significant value, additional value in terms of calculating, in terms of calculations of your value, fair price, and potentially future value of your options contract. So without option calculator, of course, it is very difficult to define limit price, but with option calculator, you can set some expectations. So again, our strategy is to acquire an options, a call option at strike 490 XYZ, and acquire at limit price $30.95 if certain conditions are met. These conditions are $464 per share of the underlying stock XYZ. What we can do, we can first of all create a buy order, and you can see that we're clicking on the buy, right? So that's the current buy 31 and last 31.40, and we create a line. This is the line of our order, remember. And you've seen it many times already, but just for someone who have not seen that, that's important to remember. That's the line where we work through. So we create quantity of contracts, and there are, it's number 2, stage number 2. We create only one. By default, it is one contract, but you can click on it and increase quantity to whatever you suggest. Third step is select to limit, because conditional orders are working only with certain types, and these certain types are as a market order, limit order, and relative order. You don't expect to work all other orders here. It is fairly complex anyway, and if you make it even more complex, one would think that volatility would be acceptable, but unfortunately volatility doesn't work here. But I'll speak to volatility later. Okay, so number 3 again, you selected type of order here. It's a limit order. Okay, and you're limiting your purchase price of the options to $30.95. It means that you will not buy options if they will be $30.96, only up to $30.95. Okay, and that's your limit price, number 4. Number 5, you are selecting this line, and then by clicking right click to the order line, you choosing modify condition. You see modify condition. And then you go through the menu to the point where it says modify. So you go right, and then you select conditions. Yeah. So again, buy, quantity, limit. You limit the price, and then you go through additional menu by right-clicking on the line, and you select conditions. Right. In the next slide, you can see that you've got a button add, and that's what you add. You add new conditions. And there are a variety of different conditions. As I mentioned, one of them, price, time, margin quotient, volume, trade. And this is, by the way, all view. I'll show you slightly different. Trader Workstation is constantly developed by interactive brokers, and they enhance it and they add more complexity, but it is very robust, and you always can downgrade your platform to the lower or previous release, and by doing so you can eliminate some mistakes if it's beta version, for instance. Number 3, you can see that in conditions you need to mention specific underline which you are going to buy. In this case, we are selecting X, Y, Z. And next, you put enter here. So you select this stock. It tells you this is smart because this technique works through smart routing. It tells you what you are basically tracing or tracking in terms of your conditions, and then methods. I would like to dedicate a little bit more time to this operator, because default method selected here is quite important. There are a few default methods, and you can see that for options, US options, the default trigger methods for US options is double bid or ask methods. Okay, it means that sometimes price can go and gap, and you can miss this gap or gap down. And if it was last, for instance, if you select the default as last, then it might not trade through this gap, and you're automatically exposed to this gap, and your order or your conditions are met only last has been recorded. That's not always good for you, and of course it's best if you are close to the market and you're watching market very, very tightly, and bid and ask is a way to do it, because of course it could skip certain level and could jump bid and ask as well, but bid and ask is fairly close to what is going on in the market. Sometimes you need to have more confidence, and you would like to see that two consecutive ask price or bid price value must be. So it means that you are confirming that it has happened twice. This condition has been confirmed twice. Plus, in default option, which is for US options, it's not only twice, but as well second bid or ask must have greater size. So it means that the volume is increasing, and you can see that happening in front of you. So if this condition is met, right, and you can have either or operator, whether it goes down equal or less or equal, or greater or equal, and the price, I mean, you have to understand your condition, what is going on. In this case, it is less or equal, meaning that if price will drop beyond 464, then only this condition will be met. Okay, so in reality, you do programming. This is for you, a wizard, to program your order, conditional order. Okay, once it's set, notice there is one little thing, which is the action. So the action in this case will be submit the order. All right. What you could do, of course, you could do some other conditions where you actually cancel the order. But I'm not going to go this way today. Just again, what we are here to do is to submit a condition when new condition order will meet the price for 464 of the underlying price, and then order will trigger. Let's just see how transmission goes to the market. This is the market price. Okay, this is the market price, and let me just come back to it again, and this is the limit price. Of course, you notice that the relationship limit price to the options itself. So first condition to buy one contract of underlining if underlining is less than 464. Okay, and you can see this is whole scenario. You're buying one contract at limit of $30.95. Market price for this is about that range, right? But market price will be different because we don't know what market price will be once these conditions are met. Okay, and we see now how it works. We have two layers of information. First layer is predominant layer is the market price of underlining. You can see that market price has moved to 464. Okay, and then condition is releasing order to the market. You can see that that one contract with limit order was submitted to the market, and you can see our price. Okay, so now our order is working around this price, and if our limit will meet the market, as you can see it here, then order will be filled, and the price would be no greater than $30.95. It could be potentially less, but no greater, and you get the contract. Okay, so let me just go through this step by step again and show you an example with Trader Workstation. So you can see again, in this case, it's SPY, which is S&P 500 index. In this case, it's ETF fund representing 500. And we've got here underlying price, 131.09, 131.10. We are placing a buy order, so we're clicking on ask, and we are creating a new line. Clicking right click, we've got modify. So we're going through modify, and we are looking at conditions. Now we've got conditions here, and you can see that picture is slightly different, but in reality it is pretty much the same. So we are adding a condition, and we actually can add more conditions, not just one. In this case, you can see that condition was the time. So next, we will select the time, and we will create a condition that the order will be executed only within a certain time frame. Some of you who already had experience trading live with me know that Australian market has certain time frames, and sometimes you can obviously see that market is just about to go and have lunch, and sometimes you can take advantage of it. So conditional orders can be useful for you because these orders can be submitted only if market moves certain direction and reach certain price. And it will be not available for anyone on the market, so they cannot see it as a hidden order. They cannot just anticipate anything because this order is not on the market, but it is very much linked to the market if conditions are met. Okay, let me just quickly go through volatility presentation, and then we will go and we will do exercise on our demo platform. So what is volatility orders? Volatility order is well part of the advanced orders, and this is as well very unique for Trader Workstation. These are specific orders which allows to trade volatility instead of price, and actually professional traders often trading volatility itself rather than prices, because ultimately you do trade volatility, not just price direction. But if you're selling calls or if you're buying calls, you still trade volatility, because implied volatility is actually expression of the price, and you can see that description over here. And Trader Workstation will calculate limit price for you based on your volatility, and it gives you much more flexibility, because volatility change will be rapidly as well embedded into the market. And if you have already preset strategy, then you can just use in Trader Workstation, instead of bid and ask, just the volatility, and you can express this volatility annualized or daily. You need to know that this type of orders can work only with certain conditions, and these conditions are smart routing, meaning that you have to use technology of smart routing with IB, and all legs must be on the same underlining, so you cannot have Rio Tinto and BHP paired together for some reason, doing arbitrage and trying to do volatility, not with Trader Workstation at least. Each leg must be independently eligible to use the volatility order type, and if you're trying to buy and write, then it doesn't fit into requirements. So these order will not work. Volatility orders will not work with, say, covered calls or mirrored puts. So that's not acceptable, unfortunately. But you can still do other purchased stock, for instance, or other type of orders, which will help you to enable some delta hedging, etc., more complex stuff, which we can discuss individually or at your request. Just to let you know that volatility orders are specifically trading with the same underlining. They have to be eligible for volatility order types, each leg, and they can be traded as a day order only, meaning that by the end of the day, your order will purge from the market, and if you want to reestablish your order next day, you have to come back to the trader station and do it again. Okay, so how you can do volatility order, very simple. You can see trading tools. I'll just underline it here. And you are going through the menu, and you can see volatility trader. That will create another tab, like you can see portfolio, stocks, options, etc. And then you create another folder, basically. And in this folder, everything will be expressed in volatility, in terms of volatility, plus you'll have some references to model volatility, implied volatility, and you'll see the prices in, of course, in implied volatility. Okay, I think that was quite intense, and thank you for your attention. That was just formal presentation, and I'm going to show and demonstrate how it works in real life. I mean, it will be shown through a demo platform, of course, but let me just do it right now. First of all, let's just start from volatility itself, and I'll just show you, first of all, there is a tab on my screen. Oh, I hope that it still works, because sometimes I have too much. Yeah, let me just go through OptionVue first, and then we'll come back to interactive brokers. For some of you who already have OptionVue, you are familiar with this trading system platform. But for some of you who is not, I would like to mention that, of course, this is exceptional tool for you to manage your positions and specifically manage your trades, right? So, for instance, if we have some combination, we can always analyze it here. And this is some example of some broken butterfly, and you can see, of course, some movement according to data, and in terms of date until expiration. So you can see profit and loss, and you can see what will be your exposure with price movement. But you can do as well calculation, very precise calculation in terms of projected date, price movement, and volatility. And it gives you not only price per leg at this point of time, fair price, but what is important and what is not available through many retail platform, it will give you expected theoretical price of each leg, right? And it's really important for you to understand how it will work out for you, how you can exit position if market moves against you. For instance, if volatility will drop by 5%, how price will be reflected in. That's really important to know. If price, for instance, goes ballistic, and what happened then, right? So you need to see it in a very simple yet very precise environment, how it will affect you. And OptionVue, of course, provides you that facility. So I do recommend you to consider this. And who has OptionVue and doesn't use it much, please give me a call. I'm more than happy to give you a hand and show you how it works if you don't understand something. Plus, of course, Volatility Chart, okay? This is as well really, really good. Unfortunately, Interactive Brokers does not provide as good chart in terms of volatility as OptionVue provides. Maybe it looks a little bit too old in terms of graphic, in terms of design, but the main point, it gives you information which is not available on IB. For instance, you can see statistical volatility versus implied volatility expressed in percentiles, which is great mathematical tool for you to assess where you can trade volatility. From that graph, you can actually trade your stock based on volatility. You don't need to do mathematical calculation of actual price. You can just do a projection of volatility and use volatility trading. Okay, what is as well important, you can do through metrics here. I can just show you a few features which are a little bit advanced, but since we're talking about advanced features, I think it's important. For instance, this is horizontal skew. It's probably not the best illustration, but you can see volatility cone, and this cone showing the spread, the variables of volatility, and you can see that volatility currently is very low, 10%, and this is term structure, 30 days, 60 days, 90 days. Let me just show you another example, which will be probably more, let's just take, for instance, Cisco. Again, you can just use this model volatility and you can create, you see that volatility is different, the structure is different, and you can see how volatility is moving along with the price. If you expect that price will drop, for instance, you can see correlationship between expected volatility, which these lines are, and the price movement, right? So you can see in 30 days, 60 days, and this is very, very important. You can see this projection of volatility, and based on this projection, you can create price for your stock options. Okay, I think that's enough for OptionVue, and let's just see a few examples with volatility. In this case, you can see this is option chain with Interactive Brokers, and I already placed a couple of orders. One of them is conditional order, and one of them volatility order. Let me just demonstrate what is volatility order here. You can see bid and ask in normal just dollar value, and on the other hand, I placed volatility 43%. I can see that implied volatility here 43.62.9. This is mid-implied volatility, and I can express these prices as well in terms of volatility instead of dollars. And for instance, I did my observation of Ford, and I expect that volatility will drop, and then I'm more than happy to buy at certain level. You see that it's actually 2 decimals, so it can be very precise, maybe even more accurate than if you're just trying to catch midpoints between buy and ask and try to catch the spread. So it gives you a little bit more advanced technique in terms of getting mid price or best price. But of course, you need to be very precise in terms of your calculation of volatility. So how you can do it? Very simple. You start the same. For instance, we would like to buy put, and we would like to use volatility, and our selected strike is February. So we select ask. You can see another line. And then instead of limit, I create vol. Okay, of course, system will tells you that it provides you best efforts in terms of dividends, and dividends are important in terms of calculation the fair price, and that's as well important part of your calculation, because when you select volatility, ultimately you rely your choice, your fair price on Trader Workstation. So it could be accurate, it could be not. And of course, you need to verify it by using some independent tools such as OptionVue. Anyway, so you can just leave it and transmit, say, 66.95 volatility, or you can select uh, right click, and then you go modify, and then you can see, for instance, order ticket. If you click order ticket, you will have advanced view on the order, and you will see what you can do with this order, how you can modify it further. On the surface, you can see buy and sell, and you can see quantity, you can see volatility. Then you can click on volatility itself, and you can see volatility over here, which you can actually adjust. Right. So there are other functions which you can use with volatility type. In this case, you can change volatility type from daily to annual. Normally, you use annual volatility type, and you can create as well some features as a hedge delta using futures, for instance. We're not going to discuss it today, but you can see that you can change volatility as you wish, and you can say 56, for instance, and that will create limit price of 24 immediately. And you can see that it is significantly below the market spread, 28.31, but we can still transmit it and see how it will work. So your order ticket created, you can see order type volatility routed to the smart, it's only a day, and you can see 56% volatility. That's what you're buying. You don't want to overpay. You don't want to buy expensive put options. That's what is your limit. Okay, and then you go and transmit. So order is on the market. Now it's on the market green. Okay, I guess that's quite simple. Now we can go through different set, and let me just try to switch. Okay, you can see a trading tool. Okay, yeah, I'm afraid it's not actually active, that specific page, so we probably will stick with but anyway, you can go with trading tools as I showed you. You just go to volatility and you add volatility. There will be a tab, volatility tab. So if we come back to order chain, let me just demonstrate you some conditional orders. And shall I cancel this? And let's take opposite side. In this case, we might take call position, but saying that current price is $15.30, we probably will not buy at this point of time as our strategy. Again, this is demo system. This is only to demonstrate for educational purpose, and I'm not referring to Ford as actual underlining to buy or sell. So, for instance, we decided to buy call, but we would like to buy call only if price will drop to, say, $15. What we can do, we can select, for instance, 14, which will be in the money still, and we can click on 93, which will be ask, and then we create the order. Of course, if you just transmit as a limit, there will be no conditions attached, but we need to attach conditions. So we click modify, and then you create condition. You can see this. Okay, right click, modify, and then condition. And then the field with conditions just appeared. Notice that there is basic as well available, and volatility shadow that's not available, and the action will be to submit order. So we are creating a strategy. First part of the strategy to define the trigger point or a condition which will unfold our buy order of the fourth call order. You see add, we create add, and let's go with easiest and create price. We create price, and then we go with wizard and we select. Again, we can choose something more complex, and we can go with anything else, underlining, which is highly correlated to Ford or negatively correlated. That's your choice. In this case, we'll go with Ford. I type F for Freddy and then enter. And then we've got a selection. What we can do? Yeah, we can go with Fiat, of course, but we would like to go with Ford Motor, and we would like to go with the stock. So that's done. And if you click on default, as I mentioned before, there are few options such as last, meaning that only once specific last would be met, then order will trigger. Or double last, if you would like to be really certain that it has gone through to the market. It's not just bid and ask manipulation, because unfortunately we are living in an environment when order can be just a fraction of a second by computer flashing and then disappearing without actually execution. So you need to be really cautious about it, because you are competing with monsters who is proprietary algorithmic traders, and you need to consider, if you go into complex stuff, how capable you are, okay, how capable you are to compete. And if you are going through conditional order, you need to be really clear with your conditions and your strategy. Okay, say that you decided that it will be double bid and ask, for instance, right? So it means that if underlying stock will be, in this case, we would like to see it less or equal price of $15 for underlying stock, and that will happen twice with an increased volume of second one, then our condition is met. Right, so that's the condition, and then we have to switch to the order itself, basic order. And what we're going to do, click once, and then type there, say 10 contracts. And of course, that limit price is given within our current market price, 83 cents bid, 93 is offer. But we actually expect that price should move as well, should move to the downside, because underlying will move. However, volatility will increase. So again, you need to be really cautious about at what price you're going to buy. Okay, and I do recommend you to use OptionVue to calculate your limit price. But you can use other means and calculate your limit price and say, okay, I expect that that limit price will be 65 cents, and my order is for the day, and I just would like to accept it. Okay. First thing, I do recommend you to go really consciously through your order ticket and click margin impact. Although you're buying, you still have to understand what you're doing, and although you're not short in contract, you're not overexpose yourself. You have limited exposure of your premium you paid, but still you need to understand what you're doing. And it says that you are buying at limit 65 or better if conditions are met. So you transmit, and you see it's not green, it is still blue, and this will go to the market once regular trading hours occur. You can see, if you hover this, you can see it clearly, right? I'd like to teach you as well some little tricks which are really important for you when you see the big spread, or if you see that situation is not really it's a huge uncertainty in this case. You just don't have any bids on that side, right? Not only a huge, for instance, huge spread, but you don't have anyone on the bid side, and you would like to know what's the price. Luckily, law prescribing market makers to make a market, and Interactive Brokers has this fabulous function for some trades, not for everything. But still, for equity, it is available, and for instance, AEP index in Australia, it is available. And yeah, you see, for instance, for that specific New York Stock Exchange, this function is not available, and the function is to call market maker. I need to check actually if it's available on proper system, not demo system, but I'll just show AP as index XJO. Yeah, but there is a problem with that, I think. Let me just, no, it's okay. And you can see that if I right click and then go edit, oh yeah, it's just limitation of this version. You basically have RFQ, which is the call on market maker to make a market, and then you can see the second bid or ask. So you can see close to fair price market maker quotes, which is really important. Okay, so I think that's quite important. Let's just have a look with AP index and make, for instance, some other conditions. So again, we would like to work with some, for instance, puts, and we create the line, and then we right click on the line, and then we can go and modify condition, and then we create a new condition, and condition, for instance, can be a percentage change. Okay, so what we can do, we can just again see AP, and then we go with indices, and then if operator, if it's greater percentage change than say 1%, then condition is met, and then you can create put based on this condition with limit price, etc. So that's quite straightforward, and it is easy, but again, you need to understand why you use condition order. Because if you are watching the market, if you are close to the market, and you don't want to complicate it, then don't use it. Okay. However, if you would like to stick to your strategy, for instance, you draw the strategy of entry or exit, and you need to see execution of certain conditions and just let it go, just stick to your decision, then probably conditional orders are very good. Okay, I've been talking 45 minutes, and I would like to hear from you if you do have any questions, and that will be great. Okay, I've got a question from Jason. Yeah, it's not always available on all RFQ, you're right. Yes, it's not available on all indices, like SPI, for instance, doesn't work. But it is available on Australian stock, and it is available on AP index. All right, thank you very much, Dan. Is any other questions you'd like to address, guys? Again, I'm open for your basically interest, because some of you already started account, and some of you need my help to finalize your account. Malcolm, please send me email when it's best time for you, because I see that you're struggling a little bit. Ian, again, please do let me know how you go. We discussed some strategies, and let me know how you go. And as well, Gordon, feel free to contact me. And I don't want to name everyone, so just let you know that I'm open for you guys, and don't hesitate. Email me, set an appointment, and we can go through live trading through the market hours, or we can discuss specific questions.